Hello traders, Des here with Grok Trade. It's Tuesday, January 8th, 2013. Well, kicking off the earnings season on mixed note was aluminum maker, Alcoa, and it revealed an in-line adjusted fourth quarter profit, but stronger than expected revenue. Let's take a look at this. Go to a 1 minute chart. Market's closed. No, actually it looks like we're up 922. We had a nice little pop and then a drop, and that's where we sit right now. Going back to the S&P daily, so let's also take a look at the indexes as a whole. Markets were off today, actually dropping below support levels. That does surprise me a bit here. We have the S&P down 0.32%, the Dow down 0.4%, the Nasdaq down 0.23%, Russell's down 0.13%. The bank's off by 0.33%, off by 0.5% most of today, along with the rest of the markets. Now this is what is hugely interesting to me here, and it's the volatility index, the fear indicator. We are now sub 14, gang. These levels should not hold too long. The markets are nice high levels, and for the VIX to be so low, I can't help but to think that there should be a rubber band effect, meaning a spike higher in the VIX, meaning volatility will increase, meaning the market should be going down. Keep your eye on the VIX. This is huge. Commodities do rebound back a bit here. We have the gold up 0.7%, silver up about the same, in crude oil up a fraction, 0.12%. US dollar up 0.14%. And taking a look here at this is a major trend line going back. The genesis of it starts at 2007. And then we come down here 2012, and it comes across, and we've gotten above that. And I thought now that we were above it that we would stay above it and build a high base. However, we're not seeing that. Yesterday, starting off the week, we have a lower high, lower low, and we had some follow through with this, a lower high and a lower low. So we did break down below this major trend line. And we were down here, and in the chat room today I said, man, chances are we'll put in a bottom, rally back strong in the afternoon. We did rally back, but it wasn't nearly as strong as I thought it would be. I thought we would close up here higher. Did not happen. So this is a broken area here. So this trend line is not holding like we thought it should at this moment. So what we're looking for is next level of support, and that would be this swing high right here. We definitely have an area that puts us around 1447. 1447 would be a nice area of support if it does decide to come on down, and if we get a nice little doji or a hammer or reversal pattern of some sort here, we could get a bounce, a buying opportunity to the upside. But I would not be ignoring this trend line, even though it's not playing out to be overly important at this moment. Let's go to the VIX. This is big news here. The VIX, last time, I mean, check this out. This goes back to August. When we hit this, we popped, we hit this area again, we rallied hard. And anytime the VIX goes higher, that means the markets is crashing. It's crashing. We get down there, touch it, bounce, 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 bounce. We just don't stay at these levels very often. And that's precisely where we're at right now. Let's go to a weekly chart. Weekly chart, we do a touch and go, touch and go, touch and go. We're here again, touch and will we go? Maybe. Let's go to a monthly chart. If you look at this, this goes back to 2005, 2006, 2007, right? Well, at this area before we had the market crash, remember 2003, 2007 was really, really good. So we went into a state of complacency in the markets, staying at these very low numbers down here. Well, if you look, we hadn't seen these type of low numbers, I mean, going back to 2007. That's several years ago, gang. And look where we're at right now, sub 14. Look at these shadows. Every time we got there, we rallied right back higher. So we have to be really careful. Either one or two things are going to happen. We're going to go into this sub 14 level and stay complacent. The market is going to rally really strongly going into the future. Or we're going to do a touch and go, and the markets are going to have a nice correction. So be watching that like a hawk. We'll keep you in tune to it, so be watching us. Make sure you share us with a friend. Furthermore, make sure you get signed up for tonight's class. We do it once a month. We're going to be talking about gaps and gap strategies. You don't want to miss it. And also trend reversals. So we'll be teaching some trend reversal things I think you will like. And if you ever had an inkling to want to know more about mentoring, we'll certainly be sharing that at the end of the webinar. If you can't make it tonight, no big deal. Just make sure you get registered before the event. It's very important. You cannot register after the event and get the recording, but if you get signed up before the event, get registered. Even if you can't make it, I'll make sure within about 48 hours or so you'll get a recording emailed to you so you can watch it at your leisure. Take care. Safe trading to each and every one of you, and hope to see you tonight.